Comrades, this is Carl from Ushanka with another Precious Metals video for you. It has been over a year since my last video. We have a lot of catching up to do. But first, a word from our sponsor, Glorious Hat. Remember, comrades, the Marxists in the Democrat Party aren't going to mock themselves. It takes dedicated patriots to elevate the mockery to these high levels. Check out glorioushat.com to learn more about the political novelty of 2016. Here is the updated ratio chart current as of June 1st, 2016. It is the ratio plotted with the average bid price for the first trading day of each month. We now have 150 months of data. As you can see, the silver to gold ratio has been as high as 80 since my last video. Congratulations to those who jumped into silver anytime between September 2015 and April 2016. Today's ratio midday was 73.9, still quite high and good for buyers of silver. The ratio average has moved up. It was 58.1 when we had 120 months of data. Now it is 60.9. Not a huge difference, but since we are suggesting an investor pick trigger points based on the average, a strategy in 2014 would be slightly different than a strategy developed today. We'll stick to our ratio strategy we presented in February of 2014. We called that strategy number 2, which was presented in video number 4 that month. A link to that video is in the description below. Let's consider some events or trends that could influence the price of precious metals in the coming year. First, let's talk Donald Trump. If Trump is good for American business, we should see that influence the price of gold downward. If Trump angers Islam and other enemies, we should see that influence the price of gold up, especially if shots are fired. If Trump delivers on his suggestion that our debt should be renegotiated, something I completely support despite the embarrassment of default, we should see that influence the price of gold down. If Trump takes an active role in monetary policy, as he's hinted, we should see that influence the price downward as well. Remember, what is good for America is bad for gold. If good times are ahead for the United States, owning precious metals won't be much fun. But also remember, it took Reagan 3 years to turn the economy around, and that was after only 4 years of Jimmy Carter, the second worst president in the United States. Another influence might be the disintegration of the European Union. As of today, it appears the UK and maybe others will drop out of that horrible experiment. If it doesn't happen in next week's vote, it will happen in the near future. It is broken, it has failed. Any vote to leave the Union should be seen as a lagging indicator. Today, German bonds hit 0%. The demand for safe places to store money during the coming transition has led to people lining up for a 0% return. The Orlando terror attack was only 2 days ago. It didn't seem to impact precious metals. If similar attacks become routine, that may change. But let's consider the broader picture. The same people we put our trust in to protect us from terrorists are the same people we trust with the security of our internet, our markets, and our banks. If they failed to stop an openly devout ISIS terrorist from killing 49, is it possible they will fail to stop a cyber attack on a U.S. bank? The Fed recently announced that rates will be going up. Then, a few days later, bad employment numbers came out and the Fed went flaccid again. This has been, the third time? Honestly, I've lost count. Where they have talked tough and then failed to act. My opinion is the only thing that will replace today's 0% interest rate policy will be a negative interest rate policy. This Fed will always have a reason not to raise. They have lost their discipline, they have lost their focus, they have sold their soul. There have been recent rumors that gold sellers are finding it difficult to keep up with demand and maintain inventories. If this is true, and assuming there isn't an external catalyst driving demand for gold, I suspect we will see announcements similar to those when the U.S. Mint ran out of silver eagles, as they did twice in the recent years. It will be temporary. Only metal enthusiasts will take notice, and it will pass. If it gets worse, I think we'll see those gold funds and ETFs that are required to store some physical gold to announce they won't take any new investors or they're going to cap their funds. That will be the signal I'll be looking for. I found it interesting that MX Gold Corporation, a Canadian firm, recently announced they will hold 20 to 30% of their gold. They see higher prices ahead and want to capitalize on that. This is odd behavior for a miner. Let's see how that plays out. I've put a link to the MX Gold story in the description below. And last, the price of gold is pegged more to the strength of the US dollar than anything else. Gold used to follow commodities in general until last year. Gold used to follow oil more closely, but it has broken that link too. Gold's link to the strength of the US dollar remains. That has been the biggest driver of price fluctuations I've seen since I started following precious metals. Author James Rickards published his third book this spring, The New Case for Gold. I recommend this book for anyone with an interest in gold as an investment or an interest in current international monetary policies. You'll read about inflation. Jim says it's coming. You'll read about monetary collapse. He explains what it will and it will not look like. And he shares his recent discussions with gold distributors and suppliers on the supply of gold. I posted my review of his book on my blog. That link is in the description below. I'm sticking to my plan to accumulate dollar bills in my Obama Cuss jar as long as Obama is in office. I will convert them to precious metals as the opportunity arises. You can see in the photo that my current inventory is 7 ounces of gold, 1 ounce of platinum, and 120 ounces of silver, plus the cash on hand. It is important to repeat, I have lost money with this project. I'm easily down several $100s as I have spent more for most of these items than their current value. See my last video to understand how I could have tripled my money in a simple index fund instead. That link to video number 8 is also in the description below. Despite my losses, I am glad I stuck with this side project. I've learned a lot about precious metals investing and I found a fun way to save. I still plan to sell these coins after Obama leaves office. The plan was to spend the money on a hobby or vacations, but I think the wife and I are now going to consider a home improvement project instead. That is all I have for you today. Thanks for watching.